So here we are with another update for my $100,000 dividend stock portfolio that I am building. And I mentioned this on my Instagram. If you guys don't follow me over there, it is down in the description below. If you want to get the most current updates on what I'm doing with my investments, make sure you guys are following me over there, because as I had mentioned, I added another $5,000 to my M1 Finance portfolio today, hence why I am making this update. So if you're new to this series, I'm essentially documenting the process of building a $100,000 dividend stock portfolio, and I do monthly updates on this portfolio. However, anytime I am adding more money to this portfolio, I do an update just like this so you guys are aware of what it is that I am doing with my money. Now that being said, quick disclaimer here guys, I am not a financial advisor. This is not financial advice. This is just me documenting what I'm doing with my money for entertainment purposes only. And if you find this information to be useful, feel free to subscribe and follow along with this series. But that being said, on this Monday and the previous Monday, I invested $5,000 on each day lump sum into the market on top of my normal $500 per week of dollar cost averaging. So I'm investing $2,000 per month into this portfolio, but I also am funneling new money into this as I see fit through these lump sum deposits. So in the last 8 days, I have invested $11,000 into this dividend stock portfolio. So I want to go ahead and give you guys an update on my holdings, what I purchased today, and how my portfolio looks overall. But before we do that, let's take a look at the market. It's 3:30 Eastern Standard Time on Monday, so we're coming to the close, and let's see where the market stands. It has been a rough day so far. So right there on the left, we can see the S&P 500 is down 7% today, a little bit more than that so far. Dow Jones Industrial Average down 7.3, and the NASDAQ is down about 6. And these headlines here say it all. The oil market is crashing. They're calling it a stock market meltdown, etc., etc. So there was a lot of activity in the market today. If you follow the futures trading at all, they actually halted trading Sunday night after there was a 5% sell-off. And trading actually halted this morning as well for 15 minutes because of the excessive sell-off going on. And this is essentially a safety mechanism built into the markets to essentially stop you from shooting yourself in the foot. It's like a 15-minute timeout to say, hey, maybe take a breather here and decide if you want to do what it is that you're going to do when the market goes into a selling frenzy. And if the market does sell off enough, I believe it is a 20% downturn, the markets will actually close for the day and resume trading on the next trading day. So this is the worst day I have seen in the markets personally as I have invested. And so we are seeing a massive downturn. I did some buying today, so let's get into that, what I purchased, and then we'll look at my portfolio as a whole. So today being March 9th, I invested $5,499.98 in M1 Finance, and this is how it broke down. So first of all, Delta Airlines is a brand new addition to this portfolio. Essentially what I decided to do, I was getting a lot of comments from people saying, you know, American Airlines, I'm crazy to buy it, and I talked about how the debt load for that company is significantly higher. So I decided to diversify by purchasing another airline stock. So I initially had American Airlines making up 16% of my portfolio. So instead, what I did is I added Delta Airlines and I split it to 8% Delta, 8% American. That way I'm not all in on one airline should something happen. So in my opinion, you know, that splits it up a little bit and diversifies me a bit there. Another $1,100 went into Dunkin' Donuts stock. We had $346.10 go into Microsoft. $634.46 going into National Grid, the utility stock I own. We had $331 going into Apple, $585 going into Walgreens, and $1,007 that went into IBM. And this is all based on the target allocations set up on my M1 Finance portfolio. Now, right now, my portfolio is pretty out of whack because of my General Electric investment. And I want to speak about that quickly because a lot of people commented on my last video saying, why do do I own this stock? Why is it in a dividend portfolio? And they just kind of questioned me about this investment, rightfully so. So the deal with General Electric here is that this is a stock that I purchased back in 2017, and this was a really good learning experience for me of buying into a stock too early. So if we click on my General Electric investment here, you will see that my cost basis is $14.15 per share, and obviously I am down massively on this position, down 34.7%. It might even be more because this is actually just the money-weighted return, not the time-weighted return. But anyways, I'm down massively on GE, but I've owned this stock for 3 years now, and I have no plans on selling it. I mentioned in one of my earlier videos, I was actually near break-even at one point with this stock earlier this year. So as you can see here, my cost basis being $14.15. If we take a look at the stock, I'll show you what I'm talking about. Now it's down to $8 a share, but even recently, it was up to $13.16 per share because the company overall was doing pretty good. But then we had some bad news come out about how much free cash flow was going to be lost as a result of said virus. General Electric is down 12.3% today, and it's going into a massive sell-off. As far as how far down it will go, if I were to take a guess based on the last year, it's probably heading to the $7 to $8 range per share or lower. So I'm not touching General Electric. I haven't put any new money into this stock in 3 years, and so the way my portfolio is currently set up, no new money is flowing into this stock. And that is because my target allocation for General Electric is just 8%, and right now this represents 33% of my portfolio, so I am overweight in this stock, but I don't have any plans of selling it. I believe in the future it will be a $20 to $30 stock again, and if they become a strong dividend payer again, I would consider owning it, but as you guys know, this is a dividend-oriented portfolio, and owning a stock that pays a 1% dividend is pretty much nonsense. So I'm not going to sell it because I see no reason to. I've held it this long already, and I think it's going to go back at least above my cost basis in the near future. That being said, 1 to 2 years, but it's definitely not a stock that makes sense in this portfolio based on that current dividend yield. Let's jump over to my holdings tab and talk about my portfolio. Am I up? Am I down? Obviously, guys, I'm down quite a bit, but let's take a look at the bloodbath and see exactly what's going on. So overall, across the entire portfolio, I am down 22.38%, largely because of General Electric, down 41.65%. And you guys might be wondering why I'm not losing it right now over General Electric. Well, I have held on to this stock so long. I have seen the hills and the valleys. At one point, this stock was trading, I think, for like $6 per share. So at this point, I'm used to it. I'm used to this. I understand this is what has happened with General Electric. It's been a valuable learning experience for me, but I'm just going to hold on to it and see what happens because I believe in Larry Culp and what this company can do long term. As far as Dunkin' Donuts, that's a new position here. We're just down 2%, nothing really substantial there. Walgreens, because I averaged down last week, we're only down 5.59%. IBM, we're down 9%. 3M is down quite a bit here, 16.59%. National Grid, my boring utility stock, we're barely down, 2.5%. American Airlines, we are down quite a bit here, down 15%. But that is the issue with buying into a bleeding market like this, is you have no idea where the bottom is. And for me, I'm personally comfortable with that because I have a lot of cash on the sidelines to deploy. I haven't really talked about my overall financial situation on this channel lately, but just to put it in a percentage, right now between my investment portfolio here, my Fundrise portfolio, and my Bitcoin portfolio, I'm about 20% invested, meaning I have 80% of my net worth sitting in cash, not including the money tied up in my vehicles or my house. In terms of the amount of money I have to invest, this is really just a nibble for me, and I can continue to funnel large amounts of money into the market, averaging down over time. Now, for the average person, dumping $11,000 into this market is probably too risky, and you would want to space that out over a longer stretch of time. But me personally, because I have so much cash to deploy, that is just not really as big of a risk for me because I will have a lot of new money to funnel into this investment, as well as Fundrise and cryptocurrency and potentially other real estate investments down the road. All right, circling back to the portfolio, Delta Airlines down just 1.4%. Apple down just 3%, and Microsoft down just 4%. So a lot of the new investments in this portfolio from last week were not doing too bad because I bought at a pretty low point last Monday, and so far it seems like Monday has been a good day to purchase in terms of taking advantage of the massive correction. But overall, where this portfolio is heading from here, your guess is as good as mine. It could go down 30, 40%, who knows, it could snap back. There are just so many unknowns in this market, but my philosophy here is I believe in 5 years, these companies will be in a much better position in terms of their share price, in terms of where they're at with the technologies and things they are working with. So I believe in these picks long term, and in that meantime, they will be able to pay me dividends. Now, the one thing I will say is that a lot of people were questioning why I have airline stocks in this portfolio. It's a cyclical business, and they're known for being an industry that just goes all over the place. And I can't say that American Airlines and Delta Airlines are stocks that I plan on owning for the next 10 years. So I really added them to this portfolio because I think there's a massive opportunity here, in my opinion, to capitalize on this once-in-a-lifetime opportunity. This is kind of uncharted territory of a virus spreading here in the U.S. that has disrupted travel in the way that it has. Now, could I be wrong? Absolutely. These airlines could go bankrupt. But at the end of the day, the government has to prop up certain businesses like the automakers or the banks. And there's already discussions out there about a potential bailout for the airlines, or at the very least tax breaks or some kind of tax incentive to help them out, because the airlines are such an important business to the US and the world economy. It's not like these things are going to disappear overnight. And if they did, it would be, in my opinion, after the government attempted to prop them up. So I'm not saying I want to own them for 10 years, but I believe that this seems to be a good opportunity to buy them and potentially sell them in 6 months, maybe a year or two, for a hefty profit, assuming that the market snaps back. And basically what I believe is going to happen is that all of the people that are not traveling right now, well, they're still going to book those vacations, but they're just going to wait until this blows over, until the concerns about travel are lifted, and then we're going to see a massive boom of people going on vacations, which should help these airlines. Now, that, again, guys, is just my opinion. Who knows what's going to happen? We will see, but that is my thesis behind these two investments. Now, the last thing I want to cover quickly in this video is this article that M1 Finance sent around, which was really interesting. And essentially what they did is they looked at what investors were doing during this time of market turmoil. They looked at the data for an average Monday through Wednesday over the prior 4 weeks and then compared it to last week based on, having a massive correction taking place in the market. And what they saw is more people were contributing money during this market downturn than in the average weeks. Now, I will say this, M1 Finance is a long-term investing platform, and it is for more of a sophisticated, dare I say, investor who is not going to be shooting themselves in the foot when there's a market downturn. But it is good to see that most investors are not buying into this fear-driven sell-off, and instead they're sticking it out or even loading up at a time when the market appears to be on sale. So overall, at least in the case of M1 Finance, investors are buying the dip, and they look at this as a buying opportunity, but the same may not be true across all brokerages, but that is certainly what I am doing, is buying into this market, and I will continue to do so through dollar cost averaging as well as some lump sum investments as I see opportunities in this market. Now, if you guys want to learn more about M1 Finance, I do have a free training down below that walks you through step by step how to sign up for this brokerage, how to get started, how to build a portfolio, and it really walks you through the ins and outs of this platform. That is linked up down in the description below, as well as a link to sign up for the M1 Investing app if you are interested. Full transparency, guys, I am affiliated with M1 Finance, so I may earn a small commission if you decide to use that link. But thanks so much for watching, guys. I welcome you to leave me comments down below. I will reply to as many as possible, and I hope to see you in the next video.